Singapore has very successfully built itself up as a wealth hub of Asia over the last 10 years. And with the amount of wealth being present in this market, Singapore investors have to find opportunity to invest this capital. And with the government measures and restrictions in the local real estate market over the last 2 years, 3 years, it kind of forced the Singapore investors to look outside of the domestic market to search for better returns. So over the last 2 years, I think Singapore investors have gone out in a big way in some of these markets. And as far as our statistics show, that among the Asian investors, Singapore is taking the lead in the markets like UK, Australia, as well as in China. The first wave of developers, when they are looking at outside of Asia, they're looking for more stability, long-term growth of assets. So the income generating assets, the passive office buildings, retail center with a good local retail asset manager is something that they like to invest in. But later on, I think the most recent wave of investors include the developers who are willing to take much higher risk. So they undertake development sites, residential development sites in prime gateway city, even in second tier and third tier cities, they are willing to undertake development, residential development. Singapore investors will continue to look at outbound investment, but they will start to shift from key gateway cities to the second and the third tier cities in some of these Western markets in Europe and the US, because the recovery in this market is so clear and so obvious that the growth is there for these economies. So Singaporean investors will be comfortable to go into outlying cities and sectors that they have not explored before. I think the Singaporean investors will start to look back seriously into the Singapore market, because I'm starting to see pricing expectations start to meet. So with the further softening of the residential market, for example, investors are right now willing to come back into the market because the returns that they can get with the softening prices start to match some of these investments that they found overseas. So it makes sense for them to compare, and once there are opportunities exist in the local market, they will want to come back because it's still home for some of these investors, and it's a lot easier for them to manage the investments domestically. I think 2015 commercial was continue to do well because of lack of supply and improved demand. But residential sector will be an interesting sector to know because prices right now has started to soften to a level to attract interest by the market. So I will see more volume of transactions in the residential sector. Industrial sector, I think it will, with the government trying to cool down this sector to make sure that the business cost is maintained to a certain level, I think industrial sector will continue to be weak in 2015. Singapore has built itself as a wealth hub for Asia, so inevitably there are a lot of high net worth individual family offices which are attracted to this market. With the growth of this sector, there are a lot of capital in here looking for opportunities, and it makes sense for them to start looking at where they are based. So I think 2015 will continue to attract more foreign investments into Singapore. If the Singapore market can offer the type of returns that are comparable to the other markets in Asia as well as the rest of the world. The interesting thing is that sometimes these foreign investors, when they are looking at investment in Singapore, they have other agenda rather than just returns. So looking at Singapore as a safe haven, so it's like buying a bond in the Singapore market. So they will look for some real estate assets in Singapore as a fixed income bond to the certain effect. That's where I think the foreign investors, particularly the mainland Chinese, will continue to come into the Singapore market. The foreign investors are basically, there are two groups. The group that are looking at Singapore as a safe haven and a long-term horizon. So this group will continue to look for income-generating assets. So the shop houses, the offices, even some of these retail shops will continue to be an attractive asset class for these foreign investors. So they like to buy, of course, buy something with stable income without much asset management involvement. But there's another group of foreign investors who are the developers, the foreign developers. We saw them coming in a big way in recent months. This group are mainly from mainland China, and they are coming into this market to take opportunity of the softening residential prices, and they are confident with the growth of the Singapore market. So they are going very much into the residential sector, development side, from particularly the government land sale side.